report, and now the ACCT414. And that is the book still lists this as a CAFR. And I'm contacting them about that. It's all throughout chapter 17. So hopefully we will get that changed soon. But along those lines of, you know, kind of civil rights and just having, you know, a more woke experience is that there is a case, you know, usually in business people are generally not, we're really not known for being on the front lines of civil rights or anything like that. But there is a case of that kind of happening, and it actually has to do with South Africa. And I've had this in other classes. I should have had it in this class earlier, but it's called the Sullivan Principles. Let's see if I can pull it up here. The Sullivan Principles. Reverend Leon Sullivan was a very big civil rights person, and he was put on the board of General Motors. And to kind of put this into a framework, we didn't talk about ethics in the 1970s. We didn't talk about it in the 1980s. We talked about it, started talking about a little bit of it in the 1990s. So this is way before ethics became, you know, part of business or part of a regular curriculum. It just wasn't, you know, business was business, and that's the way it was. So General Motors was, at that time, one of the biggest companies in the world, if not the biggest. They may have been the biggest company in the world, but they're a very big company. And Leon Sullivan, on their board of directors, let me share, hold on, came up in 1977 with what became known as the Sullivan Principles. Now, other companies had things that are similar to this. You know, all companies were kind of, you know, slowly starting to get more and more into just the equality and the justice and injustice and all that kind of stuff. But the Sullivan Principles were unique because while all these companies had their own thing, these became something that other companies would adopt, and that other companies would say that we are signed on for the Sullivan Principles. Before then, it was just all kind of a hodgepodge. Every company had their own thing, but the Sullivan Principles were really something that every company could say, okay, we are, you know, going full steam ahead with these Sullivan Principles because we believe they're right. And when you signed on for the Sullivan Principles, that meant that the company basically could be kind of held for those principles. And most of these principles now are, you know, kind of the kind of things that you would imagine they would be. Fair and equal employment, equal pay for equal work, and all that sort of thing. Preparing people to take higher level jobs in the company who were excluded before. And one of the big and most important ones was this last one that was added in 1984, and this is one we're still doing today quite a bit. Work to eliminate laws, customs that impede social, economic, and political justice. So this is, and now this is made in 1977. This is, you know, this goes back. Now, here's the interesting part about this. Up until 1990, South Africa had apartheid. And it came to an end pretty much in 1990. It took them a little, couple, you know, like 3 or 4 more years to work out exactly the constitution of it. But these Sullivan Principles became very important. Many companies in South Africa started adopting these principles. And they would basically say, look, we're going to ignore your laws about this. And in our company, we are going to follow these principles. And they started doing that. and more than 125 companies doing business in South Africa that adopted them. And kind of by the end, when apartheid started to come unraveled, by then 100 companies had stopped doing business. Now, one of the reasons why you wonder why didn't all 125 companies stop doing business? A lot of these companies employed many Black people, so they didn't want to really do that. You know, it's one of those, you don't want to put people through hardship, but at the same time, you want to force change by the government. So it was one of those kind of balancing acts. But anyway, these companies were leaving. Now, the apartheid government was a conservative government. They were kind of a business government. Now, when you have 100 companies, and these were usually the biggest companies, were the ones that pulled out. So when you have 100 companies leaving, all of a sudden your base is saying, what are we doing here? So this was one of those cases where, well, it's not the only thing that led to, you know, the abolishment of apartheid. It certainly was one of them, you know. And this always kind of hits home to me because I grew up in the early, you know, I was a kid in the 60s. And in the 60s, we had apartheid. And it was ugly. It was horrible. And, you know, it really affects you deeply. I hate that kind of stuff. I just hate it. You know, I hate that we went through it. But I mean, in the 1960s, you had laws for people based on race. So it was really pretty crazy. But again, you know, so here you have this basically one person. Yeah, he's on the board of directors at General Motors, but there's not a board of directors at General Motors. A lot of people have been on there. This was one person's initiative that did quite a bit to bring a whole country and hundreds of millions of people, you know, equality and justice and freedom. So when people talk about business people as being, you know, they don't, you know, they're no good and blah, blah, blah. Actually, there's been a few times when we've pulled through, and this was certainly one of them. And these Sullivan principles they're still around today. Another thing is that the Leon Sullivan still has a conference that goes on in for the African nations, and they arrange for this conference every year, and they are really saying, okay, you know, we have to address our problems in Africa, but we also have to do it within the global outlook. So it's actually, I think he died in 2000. His legacy is still going on today, 21 years after he died. So a very important person and very important time, and you know, a very unusual thing that a company, you know, their policies were adopted by many other companies, and not just in South Africa, I mean, all over the world. And, you know, they're still relevant today. So any question on that? It's a very interesting thing, you know, the one person had such an impact on, I would say many, you know, again, it wasn't the only thing that stopped apartheid, but it certainly was one of them, that these, the businesses were abandoning the company and abandoning the rules. And that, you know, not only were they the ones that stayed would say, look, we're going to promote anyone, you know, you're going to have Black people supervising white people, and the world's going to keep spinning, and, you know, that's just the way it is. So anyway, and yeah, this is way before ethics. Ethics thing. Oh, one more interesting thing I'll throw out about this, and that is that there was actually a study done on the impact of the Sullivan principles on corporations. And what they found was the corporations that adopted the Sullivan principles were far more profitable and had far more growth than the ones that didn't. So it was not only a great social thing to do, in the end, it was a great economic thing to do. I mean, it just was the right thing to do. So, okay. Well, I think today we need to, any questions on that? Let's see, there's no, I don't think I can improve on the principles. So. Today we're going to finish up that handout. Okay. Government sells $900,000 of bonds face value to finance of a new warehouse. So what are we going to, what's the journal entry for that going to be? You tried these, right? What'd you get for the first one? Did you guys do this? All right, well, let's look at it. Let's get a different one that we sold the bonds for. I think we have one up here, didn't we? It'll look like this. That's the capital projects fund. And government sells bonds face value, so this will be cash is going up. Financing sources, bonds, 100,000. ISO financing. All right, so that's in the capital projects fund. Now, you could have picked it up in the general fund and then transferred it to the capital projects fund. Either way, it will work out exactly the same. Okay, B. Signed a contract for construction of the warehouse. Now, notice a transaction has not happened yet. They did not build the warehouse for us yet. We signed a contract. But what do we have to do when we, in this case, sign a contract? Think about kind of like a purchase order. What budget accounts do we have to use for that? Anyone?
Would it be like a vouchers payable?
Close, but not yet. When the actual work's done, we absolutely will have a vouchers payable.
Encumbrance.
Yes, very good. So encumbrances. And encumbrances outstanding. Now notice we don't owe them anything yet. We will, but not yet. And basically what we're telling people is, look, don't spend this $1.1 million because it's already spoken to for. C, I don't think we did we? I can't remember if we did. I don't think we did a C. Maybe we did. I don't know. Government transfers 130 in unrestricted funds for the eventual payment of debt in A. Okay, so this is the general fund. Usually we'll set aside money and say, look, we have to pay off these bonds at some point, and so we're going to put it into what they call the debt service fund. So this debt service fund is what we're going to use. I don't think we've done the debt service fund, have we? I should have given you that one. Anyway, let's go ahead and do the entry. So this will look like this. Let's do the general fund first. Okay, so they transfer the cash. So the cash is going, for the general fund, the cash is going down. So cash, it's an asset going down, 130,000. Now notice that the general fund is not spending this money. It's giving it to, it's going to get to the debt service fund down here. So they're going to transfer it out, and the debt service fund is going to transfer it in. So the general fund will look like this. You might say who it's to. Yeah, with it, transfer out. And the debt service fund will kind of have the opposite side of that. They'll pick up the cash. Now they have 130,000 of cash. They can pay off, I guess, the first installments of the bonds. So for them, cash is the asset going up. General fund will have transfers out. Debt service fund will have transfers in. Having keyboard problems. So they're taking it out of one and putting it in the other. So transfer out. And debt service fund is transfers in. Now, when they actually spend the money on it, it will be, you know, for the interest thing, it will be an expenditure, but they haven't spent any of it yet. And so until they do, it just sits there. So I got my spacing cleaned up. Okay. Any questions on this one? I know that this seems kind of, kind of ridiculous, but that's, you got to remember that these funds are separate and that they will have their own budgets and so on and so forth of money. Truthfully, the debt service fund and general fund are in the same group, right? But they'll all have their own budgets and so forth, the books that they need to keep separate. Okay, D. Government receives equipment for the fire department with a cost of $12,000. When ordered, an anticipated cost of $11,800 was recorded. Okay. So when they ordered it, what accounts did they use? When they ordered it, when they ordered it, no transaction had happened. This transaction has actually happened now, but when they ordered it, nothing had happened, and they anticipated a cost of, why is that spacing so weird? Of $11,800. So what do we probably have to take off the books? When we ordered it, we probably put it on the books, and now we need to take it off the books. Anyone?
The voucher payable.
We're gonna have a vouchers payable when we put it on at the cost. So they probably did one of these for it because they said it was put on the books when they ordered it. So they probably have an encumbrances and encumbrances outstanding. So what we have to do is reverse that. Now we put on the books at 11,800. Hold this. See it. So we got to take it off the book. So we put our hand on the money for 11,800, saying, "Look, don't spend this. It's already spent." And we'll pick up the encumbrances of 11,800. Now we do have to. They received the equipment with a cost of $12,000. So we're going to have like you said, a vouchers payable. And that's going to be a liability increasing for $12,000. And what's going to go on the other side? And I'll tell you what it's not. We do not use the equipment account. What is it when we spend money for fund accounting?
Cash? Expenditure? Sorry.
It will be, when we pay the voucher payable, it will be cash, but yeah, we're gonna pick up the expenditure. And again, we don't, people say, well, you put equipment on the books, right? Normal accounting, yeah, you would, but in fund accounting, it's just like a checkbook. You just have expenditure, you might say what it's for. But it's just an expenditure, it's just money going out. There is no equipment on the books, there's no depreciation of the equipment on the books. It's just an expenditure. It's just money going out. It's like a checkbook. Which is, kind of a weird way of thinking about it. I distinctly remember the first time I saw governmental accounting, like, oh, hold on, why is this just an expenditure? How can that be? But yeah, it's a checkbook. So I said one through, try one through A, B, C, D, and then no G. Okay, so he's a little ways down here. Yeah, this is a kind of a kooky one, and it has to do with inventory of usually things like supplies and all that kind of stuff. Companies have a way, or governments have a choice of of having expenditures for everything, or they can also keep inventory on the books of usually things that are what you think of as current assets, things like inventory. That are usually things like supplies and that sort of thing. Remember, the governments don't really sell merchandise or anything like that, so you're talking about, cleaning supplies, office supplies, all that kind of stuff. They can't just have it down as expenditures. They may also put them on the books, the supplies, whatever they are, and then have expenditures when they are expended, when they're used up. Very similar to normal accounting. Right? You put supplies on the books, and then you go out and you count the supplies, you see what's missing, and you go, okay, we must have used all these supplies. Exactly the same thing, except that instead of calling it an expense, you call it an expenditure. So anyway, if they do have supplies on the books, the consumption method just means when you consume them, when you use them, that's when you expend them. So supplies to be used for the schools are bought for $2,000 cash. And so this would just be supplies. This is one of the, one of the few times we don't use expenditures, because we will use the expenditure when it is used. Need a credit. So for instance, if they were to use, I don't know if I should put this in here, but if when they use it up, it'd just be, this would be the journal entry when they use them. So for whatever amount that they used up, you would then look like that. So if they use 500 of them, this would be 500. Be taken out of the supplies. And there's no long-term assets on the books, but you can have short-term assets, and that's what these are, supplies are. And two, there are some things that you would hold over. For instance, these could be large amounts, things like salt. Sometimes places will buy a bunch of salt thinking they're going to have a bad winter, and they don't have a bad winter, but they have the salt in it. That could be a lot of money. So they'll, keep that on hand basically, and as they use the salt, then they will expend, it'll be an expenditure, expended. Okay. Okay, the state awards a grant of $90,000 to supplement police salaries. May be paid to reimburse the government, but only after the supplement payments have been made. Okay, so this is a grant that does not come with the money. And some grants are like that. Sometimes they'll give you the money right up front, and then they'll want to know how you spent it. Sometimes they say you got to spend the money first, and then we'll reimburse you. And I've seen cases where people would say, well, the government could have got, could have spent this money and could have gotten grant money for this, and the government said, well, we had to spend the money first, and we didn't have the money to spend. So, sometimes you have that kind of a problem of not having the money available. But basically, what you do is you'll pick up a receivable, which is an asset, and then you'll also have an unearned revenue. So you kind of have two things going on here, in that you'll have a receivable, but it's really only going to be a receivable if you spend the money. And when you earn that revenue. Okay. So This will actually be a grant receivable. And the reason that they use receivable instead of a due to is that it hasn't been actually earned yet. And this down here, it's not going to be, it's actually going to be unavailable until similar to our unearned revenue. And I think I mentioned this before, or maybe I didn't, but the reason we use unavailable is that unearned revenue is, it has a connotation that you earn revenue. It may not always be the case. Okay. Oh. Okay, this is just the one that, like we did before. The taxes receivable. We mailed out 600,000 of those. Because the 4% will no win. I shouldn't say win. Let's fix that. Will never be collected. It can be spent immediately. I think what they're talking about there is it can be spent in the current year. Okay. So like well, 4% of 600,000. $24,000. The rest we get to pick up as revenue, and so we can use the revenue in the current year. Five, 7, 6. And none of that is deferred. Now, as we, for this one, as we earn it, the unavailable revenue will just become revenue. And, you know, the grant receivable will set in the bill. So if we paid out 10,000 of it, police salaries, we would simply submit that we paid out 12,000 for the police salaries, and this grant receivable would be worked down as we spent the extra money. Question on that? Okay. let's go ahead and do the government-wide financial statements. And I know it's hard to shift, you go from kind of wacky accounting, back into regular accounting, but now it's just gonna be, for this one, it's pretty much, they have long-term assets, they have long-term liabilities. When you buy something, it could be an expense or it could be an asset, it's not just everything's an expenditure. So, it's sort of like shifting gears back into the real accounting kind of stuff. Okay. So this is kind of like regular accounting. Government sells $900,000 in bonds. Cash is going up. In normal accounting, if you sell bonds, what's the journal entry? Eventually you're gonna have to pay them off. So for normal accounting, what would be the journal entry?
On payable.
Yep, bonds payable. And if liability. Yeah, it's going out. So government-wide is really kind of like regular accounting. It's very similar to what you'd normally think of. You issue bonds, you're going to pay off at some point. Okay, it's bonds payable. No long-term liability. Governmental accounting, the fund accounting, there are no long-term liabilities. Other financing source, this is just money from heaven. Down here, we pick up the long-term payable. Signed a contract? No entry. The transaction has not occurred. We sign the contract, but until they do, we sign the contract, but until they actually do some of the work, we don't owe them any money. You might sign the contract and never see them again. In that case, we don't owe them anything. So a transaction hasn't happened. So in regular accounting, we don't do anything with it. C is also no entry because these are both part of the same group. So the so I think we highlight this. The general fund and the debt service fund are in the same group. So it's sort of like in a company, if if the Treasury Department, gave the marketing people money to spend or something like that, it's in the same company. There's no between departmental stuff going on. So, in that way, it's very similar to when you're in a normal business. This is a transfer to yourself, basically. Down here, we do not have the encumbrances. There are no encumbrances in government-wide. So think about our regular accounting. What equipment at a cost of $12,000? We have not. It doesn't say that we paid it yet. I'm getting flashes here for some reason. Let's listen to these windows. See what I'm doing. All right. So what was the journal entry for D? So just think about regular old accounting. You received equipment and you owe somebody $12,000. So what's the journal entry going to look like?
Equipment of assets going up, and then accounts payable.
Yep, it could also be vouchers payable, either one. Either one's fine. And by the way, on the test, it doesn't matter to me whether you put vouchers payable or accounts payable, because they really are exactly the same thing. But yes, equipment is going up. We do have long-term equipment on our books and government-wide. We do depreciate it. But accounts payable is fine too. And our liabilities are going up. We now owe $12,000 because they gave us this equipment. They sent us this equipment. It's going to be surprisingly the same. The supplies, just like a normal business when we put supplies on the books. Supplies we are bought for $2,000 cash, so we just have supplies. And the asset going down. F would be very similar with one key difference. Would be grants receivable. And government-wide is more like a regular accounting where we would have earned revenue. So this would be unearned revenue. So a little bit different, not much. And the other one has unavailable revenue because we really don't have our revenue isn't really counted as what we say earned. But in government, hey, look at this. I gotta go through this. This is goofy. And he would be exactly the same. Okay. I think that's it for that one, right? So I'll put that up for us to turn in. Okay, so next we're gonna do are these statement of activities. We're gonna do one of those. And just to let you guys know, so next week is our last class. And I'm just gonna go through a few things on the governmental accounting. The only thing on the last test, it's not a comprehensive final, it is just be chapter 16 and 17. But yeah, and it'll just be the chapter 16 and 17 exam, and it'll be due by the following Monday. So the 2nd, May 2nd. So anyway, so we're gonna do the statement of activities when we come back, and then we will.
I wanted to see the last entry for.
Sure. Yeah, so let's go ahead and take a break. We'll say be back at 7. Yeah, sent out a state of activities handout. It's in PDF and Word too. I'm gonna do it in Excel, but just because it's easier to copy stuff in it. But anyway, it basically is the same thing we looked at last week, where we have this format. But we're gonna actually come over here and take these activities for the various departments. This is what they reported for their activities. And we have governmental ones and we have business ones. We'll highlight these to make them. So we have governmental activities and business activities. And so we're going to come over here and for each of these, actually I did that too far. For each of these governmental activities, we're going to take their information, which is in the format we usually think about for accounting. Revenues first, expenses second, and whatever's left over, we usually say is our net income. In this case, we're going to say it's our net revenue. Just a little bit different terminology, but. And we're going to do the same thing for, oh, I did that wrong. Hold on a second. Marky is not paying attention right now. Still not paying attention. Okay, here we go. Let's try that again. Trying to color coordinate. Hardest part of accounting is the color coordination. That's what I want you guys to learn. Color coordination. Okay, so we got these government activities. And then we have these business type activities. And you'll notice that the revenue is usually negative for the government activities. Like streets and sanitation made some profit, but for the most part, these are usually minuses because, again, governments are there to do things that normal, free enterprise won't. So, again, now the business type activities, a lot of times they will have income because they are set up, oftentimes as a monopoly, but also times as a way to make money. It could be airports, it could be. And I live in Brookfield, so we have a zoo. There's other, whatever they are, they're considered to be business type activities, and that they're for profit basically. And then coming down here, we have the property tax stuff. Let's make that green. Okay, so here's what we're going to do. We're going to take this stuff from this and plug it in over here. I wish there was a better way to do this. So notice that we start out with our expenses first over here. So what I'm going to do, but I know, I'll show you guys, if you're using Excel, there's a nice, you'll notice that these go across the page and we could just cut and paste them in. Anything wrong with doing that, but you can actually cut the whole thing at once. So they copy, and when you come over here, now we need it going down the page. So if we say paste special and then transpose, to go down the page. It's going to mess up the boxes, but you can also just copy one at a time. So here's the weird thing about that though. Look at this. These are the expenses, and the expenses are coming first. So you have expenses and then you say, okay, these are the negative. How are we gonna cover this? And that's when you start looking at these revenues, grants and capital grants. Now, these are specific for these government activities. So when we talk about the revenues for the general government, we're talking about revenues that are only for the general government. So this could be city stickers, it could be building permits or whatever it is. Operating grants, I think we talked a little bit about this. This is when someone gives us money to run something, because the other, you can get this grant for running the government. Capital grants are when you buy assets, and usually what we talk about are long-term assets. Capital grants is like capital things like building. It could also be for equipment stuff too, but usually it's for big stuff that's going to last many years. Okay, so coming over here. Revenues. I copy that. Come over here. Paste special. And transpose. Again, it's going to mess up my border stuff, but that's okay. And do the same thing with operating grants. The meeting timer now. Probably quicker just to cut and paste them. But. And capital grant. Again, kind of wacky in that, first of all, instead of going down the page like we're used to kind of income-like statements. We're used to going down the page. So that's strange. Now it's going across the page horizontally. And it's starting out with expenses first. And
Just a quick question. The values that I'm seeing are kind of different. No, for the governmental activities. The revenue, the very first one is 840,000, but yours is 600,000.
I may have copied it wrong.
Yeah. Oh, the values are different.
Yeah, well, the weird thing is that it's going across instead of down, so that's what these are.
Yeah, I mean, those values in there are different. So for the first revenue, the first one is 600,000, mine says 840,000. For the Excel,
I think I have problem 2.
okay.
But we're going to do that one too. So if you already did
okay.
that one, that's fine, because we're going to do that one also.
Okay, sure. Yeah, there was problem.
I don't think I said that it was problem 1 or problem 2. I apologize. Yeah, everybody, I'm doing problem 1. Now, if you started working on problem 2, though, we are going to do that one. So you have not wasted your time at all. So this one. copy those, but. I redid this handout, so I'm gonna make some notes on it. Just sometimes when you do something, I didn't like the other one I had, so I thought, oh, I'll redo it. Sometimes when you do that, you goof up a little bit. Okay, so what we're gonna do is then find for governmental activities, see what the net revenue is for them. So I'm just going to move a little back here. This. That'd be a bad idea to check and make sure those all match up. They do. So kind of like we have basically two income kind of statements going on here at the same time. We have the governmental activities and the business type. And we're keeping them separate. Now they are part of the same group. For instance, Chicago, they have O'Hare Airport, they have the zoo, those are both the business type. But they all think, but they really are part of the same entity. They're just different types in that they're generally there to make revenue and hopefully turn a profit. And there are some things that are almost automatically turn a profit, and that, like the water department. If they're not turning a profit, they just increase the price of the water and they'll turn a profit. Okay, so here we're going to do the same thing down here for that. And the total revenue is probably the most important one because that is actually both of them together. And it's not like, oh, these are bad because they're negative. You expect those to be negative. These are things that are paid for by governments. Okay. So over here, we'll add all these up. Give this a color. Let's make that, how about kind of raz? Ooh, that's a little too dark. Let's try that again. There we go. All right, so right now things look pretty bad because we get this negative $2 million to $2,050,000. Is that the same as over here? Okay. So Our government activities lost 2,165,000. Our business type made a profit of 115,000. And our net revenues are 2,050,000. Okay, so we go on to, now all's not lost. We have our property taxes. Let me go ahead and highlight that. Down here. So property taxes and sales taxes, and the great thing about those is they can be used for anything. So any fund that needs them, if it's education, if it's whatever, capital projects or whatever, you can use those for anything. Hey. You can ask, can you use those for business type activities? You could. And sometimes, for instance, to get something started like concession stands, sometimes you gotta, bust out some money for the initial, concession stand building or carts or whatever they are, and get them stocked and all that kind of stuff. So sometimes there's money to start up that you need to put there. So, but that's kind of the nice thing about sales, property tax and sales tax is that you can use them for anything. You're not restricted. These up here are generally restricted to whatever the area is. So these revenues, say for instance, they may have student fees and all that kind of stuff. Those student fees cannot be used for the police department. Those fees are only used for education. So on and so forth. So anyway, so this is, the nice thing about these general revenues is that they can be used for anything. Okay, so now we can add these up. And notice that this is, I don't know why I'm doing this each one. I could have just copied it over. But this total, so this change in fund balance, let's find a color for that. Purple. So this change in fund balance, 150,000. This is what the fund balance changed during the year. In this case, it went up by 150,000. So, a lot of times these general revenues that, down here, these kind of come in to save the day and, will get us in the plus column here. So it looks like this goes up 150,000. So coming over here, our beginning fund balance. Too turquoisey. Well, it doesn't matter. So our beginning fund balance was that. And so this is our ending fund balance. So this is the balance in our ending fund. We have is 1,175,000. Excuse me, 750,000. And so that's what this whole thing is. And again, we really don't have what they call net income. They use the term net revenues. And again, the AICPA is very conscious that we don't want even though this is, and I put up here, this income statement equivalent. The AICPA is very careful so that people don't say, okay, it's net income, because this is actually not, a normal business. And the income statement doesn't really look like that normally. It doesn't go across the page and go down. So anyway, that is our statement of activities. This is the newer one. And by the way, this one is actually used quite a bit. People who are into running governments, this is one of the ones that they pay attention to. The general fund kind of accounting stuff is good for budget, keeping track of the budget. But for actually seeing how well the government is being run, the statement of activities is probably a little bit more informative. You can actually see the different areas and how well they're doing or how poorly they're doing. And, throughout the year, it isn't a legal thing like the fund accounting, but it does show a little bit better, I think, how these different things all come together, all the different departments and all that. Wacky, huh? It's a very unusual financial statement. And again, going back to the first time I ever saw one, my reaction was, "You got to be kidding me! What is this?" This looked completely bizarre. But once you get used to going across the page instead of down the page, it's not so bad. Okay, let's go ahead and do number 2. And I will be quiet as I can. And see if you can figure this one out. It's going to be very similar. I think this is what you could have gotten for it. Change in fund balance, and again, normally in regular accounting, you put this into in the retained earnings. You know, the retained earnings will go in the equity section. We really don't have that because we don't have earnings really in this. It's not, it's really not an income statement. So you say the fund balance will change, and now we have 350,000 more in our fund balance. So if we started out with 1,800,000, now we have 2,150,000 in our ending fund balance that we can use to spend on things. Any question on that? Hey, look at that. We're way early.
No, no questions.
Okay. Yeah, again, this is the wackiest of the financial statements. The other ones are pretty straightforward, but this is the one that I think we're going to focus on because it is the wackiest of them. You know, the other ones aren't too bad, and if you're taking the CPA exam, look them over. The fund accounting is basically looks like an income statement and a balance sheet, just doesn't have any long-term assets or liabilities. And the one for this, the statement of activities, the government-wide balance sheet thing looks exactly like a balance sheet we normally have, pretty much exactly. So, okay, well, I'll put up a thing to drop this into, and that'll be it for this week. Next week, we'll go over maybe a little bit more of this, but I'll then send out the tests. And next week, we'll also set some time out for class for anything else you have. If you want to go over anything else, other chapters or anything else in the class, that's fine. But so next week's gonna be the last time we meet. And so, you know, if there's anything gonna be done, at least in class, it'll be then. If you guys have questions that you want to reach out to me, I know that this next week or two is gonna be tight. So if you have any questions, feel free to contact me by email or whatever. We can even set up another a Zoom meeting or something. And if more than one has the same question or whatever, we can set up, we can have more people join it. But okay, any questions on that? Okay, all right. Well, I will talk to you guys next week.
Just a quick question. Are you going to open? So are we going to submit this one, what we just did, and the first one with the first assignment we did earlier today?
Let me see here. Let me go to the assignments. So I'm gonna put this in assignment. You know what? Did I close it already? No, it's this one. Statement of activities handout. Okay. Right for 29. That's it, and then I'll take a look and see what it. Okay, so the two that I put on for today are the problems 38 and 39, and then this statement of activities. Those are the only two new ones.
Okay.
And then next week, we might cover, I don't know, I'll see what we're going to cover, but I'll probably just more likely take questions and you know what? I tell you what, I think what I'm gonna do is send the test out early. And that way, when you're going through it, if you have questions, then next week when we meet, you can ask the questions on, and I won't give you, maybe I won't give you directly the answer, but I'll, tell you where to look and all that kind of stuff. So I think the thing is I'll do, I won't have it done tonight. But let me shoot for Friday. I'll try to get it done. Well, I'll see when I get it done, but certainly by Friday, I'll have it out I'll send you guys out the final exam. And that way you can kind of start going through it because this is the governmental stuff and it's kind of wacky. But anyway, when we meet next time, then you'll have questions like, oh, what is this? Was that? And where can I find a similar transaction or something like that? So anyway, I'll send out the exam, the final exam on probably like Friday. If I get it done earlier, I'll send it out earlier, but let's shoot for Friday. Okay. Okay, well, have a good evening, and I will see you next week, and you'll have the test by Friday.
Thank you.
Okay, bye.
Thanks, guys.
Thank you.
Good night.